Good day, Behrus here, welcome to Toronto Real Estate Board. Quick video for you to discover what's been happening in the month of March. I know we are in a different month right now, with this where the stats have to be analyzed and be given to you. March of 2026 numbers are out, and at the headline level, they look encouraging. Sales are up, inventory is coming down, but when you look underneath that surface, the structure tells you a different story. That's how I practice. I look at the details to explore for you the opportunities. This is not the demand-driven recovery, from what I know. This is the supply-driven tightening. And the distinction is what will determine where the market goes next. Let's start with the core data. Sales come to at close to 5,040 transactions. That's up about 1.7% compared to last year. So the activity has improved, but only marginally. Now look at the prices. The average price is just around 1 million 10. That's down, that's 6.7% year over year price reduction. And the benchmark price is down even more, but close to 7.5%. Despite slightly higher sales, prices are still adjusting downwards. The pressure is high. I'm going to get into that. That tells us immediately this isn't a demand-led expansion. Now, we move to the most important part of the report that every month we are getting. New listings dropped by 16.7% of year-over-year basis. This is significant contraction in the market. At the same time, active listings have also declined from over 23,000 to 21,600. So the inventory is tightening. But it is not tightening because the buyers are rushing into absorbing the inventory that we have. It is tightening because the sellers are stepping back. That's very different dynamic. Let's quantify market conditions at these levels. Month of inventory is close to 5 months. That puts the market in a balanced territory, slightly leaning towards the buyer's market. The sales to new listing ratio is close to 34%. That's very, very low according to my experience. Again, consistent with the balanced market. And homes are selling at close to 98% of the asking price. Regardless of what you do, there is a negotiation pressure on the prices. So buyers still having negotiating power. Nothing in these data suggests urgency or bidding pressure yet. Now, let's look at where the transactions are actually happening. About 44% of sales are in the $1 million to $1,025,000 range, $1,250,000 range. Another large portion of is between 500 to 600,000. You know that's freehold to condo sector. Now, the market is concentrated in the mid-range. Not entry levels, not luxury. This is where liquidity exists right now. Now, structure changes depending on location. You can tell us that Toronto sits at 5 months of inventory. That's a balanced number. York region, though, on the top level of, on the top part of GTA, York region is closer to 6 months of inventory. That's a supply pressure. Peel and Durham region are slightly more affordable, but is still operating within similar conditions. So the key difference between these all regions, not the price direction, it is inventory pressure. And that is where strategy starts to diverge. Now, if you're layering that, the layer in the macro environment tells you that unemployment is a key factor in generating income for people to come on the market after paying for everything else to come on the market for a housing market. That's at 8.1% level. Mortgage rates, everybody knows, its lowest is 4.1, 4.2 to the highest of 6% range. Depending on the product and the inflation, is around 2%, where the Bank of Canada is just telling us that's optimal level for them. So we have high borrowing costs, elevated unemployment, controlled, but certainly an inflation that's not tolerable for this kind of income. This is not an environment that supports aggressive price growth for anybody. Now, layer of macro environment is telling us that there is a potential upward pressure with what we are seeing. So we have these more or less the contraction, the demand side that I've always been telling you is telling us that the demand is still pushing the prices a little bit higher. That 1.7% is coming from here, but it's not to that extent that everybody is happy. Every homeowner who bought at the height of the market be happy. So the key takeaway is simple. This isn't a recovery phase. This is a transition phase. We are still don't know where we are going, but we are still transiting towards something. Market is compressing between the limited supply and constrained demand. And what happens next, it depends on which side moves first. Either the supply moves higher or the demand that we already started in the spring market to see some kind of appreciation in that is going to tell us where the demand goes. If you're buying, selling, or just watching the video for just entertainment, understanding your specific segment is what matters now. Because citywide averages won't tell you anything. What next moves should be is within your neighborhood and discussing what numbers make sense for you to happen. Thank you very much for watching video. So I see you on the next video for sure. Have a wonderful day.